Good afternoon, everybody. Welcome to Deal Talk with Terry Luker. And hey, listen, everybody, you want to stick around to the end of the podcast today because we're going to have Christina Dar and Jenna Sedell joining us at the end of the podcast with me and Scotty. And they're going to be talking about some really, really cool things about our spotlight on education and what we have coming up this year, going all the way up to the convention. And then they may have a few things about the convention they want to talk about. So, we appreciate you hanging around with us here at the end. And today, I've got an exciting guest with me. He's part of our team. He's an integral part of our team. If you're a commercial loan broker and you don't know Scotty D, you're probably not much of a commercial loan broker. And I don't mean to be ugly there, but Scotty is pretty much famous in our industry. So Scotty DeBerdinas is with us today. Scotty D, as we affectionately call him. And Scotty, it's great to have you here today.
Thanks, Terry. Great to be on the podcast again. I love being on the Deal Talk. I think I did it first time last year and really enjoyed it. It was a lot of fun.
Well, and I'm glad you're here today because today we've got something that we feel like is a big story in our industry as far as commercial lending right now. It isn't capital, it's capacity. And a lot of brokers are missing that. And so, Scotty, that's why I really wanted to have you on with me today so that we can talk about what's really going on in commercial lending right now for our brokers out there so they can understand what they're seeing. There's not a squeeze, and you jump in anytime, there's not a squeeze from capital. We're hearing banks and lenders have plenty of capital to lend. I can tell you we've gotten some deals that, they're working on for us. Here's what we are hearing, though, from them. They're not wanting the capacity. They're not looking for that. They're looking for quality deals that they can put their focus on. They're not hiring additional staff. A lot of these lenders are now using AI. They're not hiring additional staff. They want more volume with the staff they have, but they want good quality deals when they get a deal in. Is that pretty much what you're hearing, Scotty?
That's correct. Capital is not the issue. It's the capacity side of it, right? It's when lenders are not pulling back when it comes to putting money on the street. What they're doing is they're filtering deals a lot earlier and a lot harder. And I think you mentioned the word a minute ago. They're triaging it, right? So
right.
Think of hospital, right? They have a triage department. So any emergencies come in, what do? They triage whatever those injuries are and send them here or there or the other place. Lenders are doing the same thing right now. The deals come in, they're triaging them so they don't have to worry about dealing with issues down the road. And any deals that aren't complete or don't have all the information that's needed are quietly falling through the cracks and nothing's happening with them because they're moving on to the deals that are completed.
Yeah, I've said for many years, this is our 13th year as our credit team together, and our chief credit officer has been with us 11 years, and this coming April she'll be with us 11 years. And I've always said that's what differentiates us from everybody else because our deals go in, they're tight, everything's in them. And so we've gained a reputation from these credit analysts and these credit officers that when we send a deal in, they know it's a deal they can look at, everything's going to be there, and they can decide if they want to do the deal or not. And too many of our broker partners, they don't understand that. They think they can still just sling a deal against the wall. And those days are gone because what happens is what you just said, Scotty, and I want to make sure folks don't miss it. Your deal goes in, it goes on the stack. It's missing the tax returns or the PFS and two or three other things. It goes to the bottom of the stack, and you don't even hear from them. Right. They're not even sending you an email saying, hey, you're missing all this stuff. Get it to us and we'll take another look at it. It sits there until they free up and get a chance to look at it, or until you call and finally get someone on the phone and ask them what's going on with my deal. And they say, we don't have a deal. You don't have everything complete in there. And so I think that's, a problem for our brokers out there is that it's not money. Lenders have money to lend. They want to lend it on the right deals. So what are they doing? They're doing more due diligence. They're looking harder at deals up front. Used to, Scotty, they would triage a deal just before it went to credit committee. Now they're triaging that deal when it comes through the door. Like you said, like the hospitals do.
Yeah. So the most valuable thing in lending right now isn't rate, it's not leverage or even capital. It's lender attention. Yeah. Deals that show up clean, clear, and easy to understand, guess what? They're moving forward. That's what's happening right now. Deals that aren't clean, that aren't clear, and lenders can't understand them, you hit it right on the head. They're going to the bottom of the pile, and they're just sitting there. And the lenders aren't going to call you. They're going to work on the deals that are clear, understandable, and easy to move forward with.
Yeah, the ones that they can get a complete understanding of what we're trying to do on a deal, those are the deals and they have all the documents there. Those are the deals they want to work on. I'll never forget, we've been working with Connect for a couple of years now. And the biggest frustration that myself and Jeff have in working with a lot of the brokers in Connect is they give you half the information and say, can you get me a term sheet today? And those days just don't exist anymore. And if you do get a term sheet from a lender and you haven't given them all the docs, that term sheet's not worth anything.
Nope.
It's just not. And so, lenders want a clear picture of what's going on. And like you said, it's not about rate. It's not about, how much leverage can I get and all that. It's about getting that lender's attention because they've got a ton of deals to look at and they're just looking at the best deals from the best brokers. Most of the lenders want to work with brokers, but they want to work with great brokers, that are gathering all the docs, that are giving them a summary, that are giving them, maybe a credit memo like we do here and all. So I think it's important that our brokers understand that the lending is available, but you got to do your client a service and you got to make sure that deal's ready to go to the lender before you send it to the lender. And that's the tough part that, a lot of folks don't do. So, a simple takeaway from this for the brokers would be it's not a capital constrained market. It's a capacity constrained market. So you want your deal to be complete. You want it to be clear. You want it to be where anyone can pick it up and read it and understand what you were trying to do. Does that make sense, Scotty?
It does. It does. And it starts with that the initial credit memo, or that, just explaining exactly what the deal is, followed up by the documents. And the easier it is for a lender to understand it, the better it's going to be. It's a lot better than sending somebody an address and saying, can you fund this deal? Because they're never going to even answer that email.
I still get those occasionally, an address, and hey, can you fund this? Can you clue me in on what we're doing here? So if you bring clarity, you get speed. If you bring confusion, you get silence. Right. That's the easiest way to say it, isn't it? Yep. If you bring clarity, you got a clear picture of what we're trying to do, you're going to get speed. But if you bring confusion, you're going to get silence. So, and you need to tell them the good, the bad, and the ugly up front. And that's just, how it works. So there's capital out there, folks, but it's about capacity. And I love what Scotty said. The most important thing right now is getting the lender's attention. And you're not going to get the lender's attention unless it's a clear, concise deal that they can pick up, scan it and read it real quick, figure out what you're trying to do to know if it fits their program or not. And that's the simple thing to do it. So what about in the news right now, Scotty? Let's talk about a couple things that are in the news.
Oh, so we picked up a couple of these articles, and I thought they were important to what we just spoke about. The first one was it came from Reuters, and it was mid-January, I think, that we saw the article, and it was large banks report loan growth and emphasis on discipline. Let me say that again: loan growth and emphasis on discipline. So loan growth means they're putting money out on the street. They're just being more disciplined about doing that. Again, it's going to putting the capacity side of it and the capital side of it. They just need more bodies to be able to do the capacity, and that's what these major banks are. They're having the same issue everybody else is having. The alternative lenders and everybody else, they're falling into the same rut as everybody else is. And same with American Banker was the other article mid-January. Bankers prioritize their workflow and efficiency over hiring. It's workflow over hiring, right? Capital capacity. They're being more streamlined, and we'll talk about this, which is in the next segment that we're going to talk about, which is AI. A lot more folks, a lot more institutions, alternative finance companies are using AI to do what we've been talking about, and we'll go into that a little further. And that's using triage to streamline the whole process to be able to help their employees look at deals quicker, faster, and move forward, and kind of kick the junk to the side that's not complete. I don't mean to say junk, but deals that aren't complete, that aren't going to be able to move forward through the process. That's just a waste of time for the employees of that particular organization. Yeah,
I think it's important to know that Reuters obviously is a big group that has the a lot of reporting and all on the financial markets and things like that. And when you look at that and you see that the the banks are lending and they see their loan volume in that fourth quarter increase, but how they're lending is being disciplined. And you can always look at SBA and almost track what the rest of commercial lending is doing. And I saw this when SBA really tightened up. If you remember back, we used to could get a deal done if it didn't have a debt service of 125, but we could show that eventually it was going to get to the 125, okay, then you could get that done. Now you can't. If you can't prove a debt service of 125 going in, to the SBA, they're not doing the deal. Okay, they're just not. And then now we just got an update again where they've reiterated now they're not doing any, used to you could do 5% foreign ownership. Now it's 0. It's not 0.1, it's 0. You can have no foreign ownership. And they're not even, from what I understand, they're not even doing green card folks anymore. People that are here legally, they're not doing those anymore. And talking to some of the guys that we know in SBA that we work with, that was one of their best performing blocks of business that they had. The green card holders were great loans for them because they paid, and they had a very, very low delinquency. And now that's completely gone. So you can see the government tightening up, it's SBA lending, and it's always going to trickle down to the banks when they look at their commercial lending. They're going to do the same thing and tighten up. So that's why it's so important, to know. I get so frustrated sometimes when a broker will call me and say, hey, will you help me with this deal? And we start talking about the deal and they give me all the details and I'll ask them, what's the debt service coverage?
Right.
And it's, well, I don't know. Or what is that? And I'm like, guys, if it doesn't, we had an apartment complex that was in Connect and they wanted us to help them with it. And so Jeff and I looked at it and it didn't service the debt. In the note that they were requesting, it didn't service the debt. And we're like, guys, you're asking for $2 million too much money because it doesn't service the debt. It's got to, so you got to have a tight deal. And we're seeing that in the news, and that's what banks are doing. And I think it's important for brokers to understand that these banks, these lenders, and it ain't just banks, I know ARF, we're about to talk about them, and some of our other tier one lending partners that we have, they're all going to AI. And if it doesn't pass the I don't want to say smell test, but smell test on the AI, guess what's going to happen? It's going to kick it out, right? And it's going to sit there. So, I think it's important that our brokers understand there's capital to lend, but you got to change your game. You got to get to the top of the commercial loan brokering profession, and you've got to put together great lending packages so, these lenders don't just pass you by. And I think that's important.
Yeah. And, along with that, too, it's not just putting a great package together. Know your lender's credit box.
Yes.
Whoever you're working with, know the credit box. So you're not sending the wrong deal to the lender that you're sending it to. It's not that hard to go through and just understand the top 5 or top 4 lenders you're working with and just understand what they're looking for. If you're an expert in that field, just do that so you know the information you're sending to. So guess what? It's going to pass that smell test out of the gate because you're going to have that correct information that's going to hit all those check boxes that they're looking for. Real easy to do, and there's so many people that don't do that. And I hear it from lenders all the time that they just send me the deals that aren't even pertinent to what we do. And we have to refer them to somebody else because they're not just focusing on what our credit box is. They're just kind of blasting it out to everybody to see what sticks.
Yeah, I think it's interesting you say that because even in SBA, even in the SBA spectra, okay, you've got certain SBA lenders that like certain products but won't do others. There are SBA lenders out there that don't want anything to do with a gas station.
Yep.
Okay, we should know that. All right. I say all the time, I believe, my personal opinion is, and Jeff is the one who really helped me with this and really got our business on track, about a decade ago when he said, we really do 3 things really great. Why don't we focus on those 3 things? And that's what we did. It turned our company around. Okay. And that's a decade ago. I think brokers, if they want to be honest with themselves, ought to figure out 3 or maybe 4 things that they really can focus in on and do great. And then guess what happens, Scotty? They're going to know what lender does what, and they're going to build relationships with them, and they're going to feed those specific lenders deals, and they're going to become a preferred broker for those lenders. And so they're going to take their phone call every time they call. We have an SBA lender. I can call on a Saturday evening and get a hold of him,
Mm-hmm.
because he takes our call because he knows I wouldn't call on a Saturday night unless it was something important,
Right.
and I think I've done that once, so I don't make a habit of that. But that's what I'm saying is we really got to focus on, even inside the SBA box, there's so many lenders that are specific of what they lend to. We need to know that.
Right.
What SBA lenders do hotels. We should know that.
Yep.
And be able to go to them and not bother the people that aren't going to do the hotels. So I
Right.
think that's part of being a very professional commercial loan broker is knowing your lender and knowing that lender box.
Correct.
What they will and won't
Well,
do.
and there's the non-bank lenders and the bank SBA lenders. Know who your non-bank SBA lenders are, because
Right.
guess what? Their credit box is just a little bit different. They
Yep.
operate just a tad bit different, that they might be able to get that deal through that a traditional bank lender that may not be able to get that deal through for you. So there's just little subtle things between each SBA lender that you should know. And like you just said, I know SBA lenders that love doing gas stations. That's all they do because they
Right.
enjoy doing it and they know it like the back of their hands. Or the
Yep.
ones that do the hotels, same thing. That's what they should know is, or our brokers should know, is who they are and who to bring the deals to that sit on their desk, so they know they know what to submit.
Let's talk a little bit. Let's move a little bit and talk about the technology that's going on. What are you feeling like or seeing out there with the new AI stuff and all?
Well, it's funny. You think of AI for many different reasons, right? I mean, I use AI for content for my LinkedIn, right? That's as far as I use it. That's my knowledge base. That's all I use it for. But you'll think about AI differently for lenders, right? Because lenders are using it, as we talked about it earlier. We talked about how lenders are triaging it. They're using it as a gatekeeper for triaging also. So a lot of lenders will have a site or a portal where you'll upload the information to, and as you're uploading the information to, their AI starts to work and review that information. Okay, hey, this deal doesn't have all the information, so we're not going to be able to move forward with that. Or this deal has the information, and guess what? The AI is going to start triaging it and say, okay, everything's here. We like this deal. We're going to move it on to the next step. Or a representative from that company is going to reach out to whomever that broker is, saying, all the information's here. Call these guys. This checks all the boxes we need. Let's move forward and see if we put an LOI out for it, whatever it is. But they're doing just a lot of things a little bit differently. AI isn't underwriting the loan. They're just triaging it a little bit and acting as the
Right.
gatekeeper to keep moving it forward. So guess what? Real humans aren't wasting their time on things that AI can do, and they're focusing more on the backside, making the decisions and pushing the deals through to closing.
Yeah, I think a way to look at that, and this is just Terry talking, is AI is really looking for the deal killers, so it can just eliminate that and not bog those credit analysts and those credit departments down,
Right.
in deals that they can never do because there's a deal killer in it. Are they in an open bankruptcy? That's hard for any lender to do. If
Right.
somebody's in an open bankruptcy, so and brokers, we should know that. But I think that's important. You'd like to think that, well, it's commercial lending. We could have one standardized package and one standardized AI and all that. No, you can't, because every lender has a niche, like you said, and they're all going to be a little bit different in what they will and won't do. And that's why, we've got to know that. I think AI is important. I think it's going to help these lenders um, navigate away. And this is the only way to say this, just be transparent. It's going to help lenders navigate away from bad commercial loan brokers, ones that won't send them complete packages. They're going to end up going away, and they're not even going to accept deals from them. I mean, we have as a lender, as Commercial Capital Bidco, which everybody knows, that's our bridge lending company. We have brokers we won't work with because we've got found deals and caught deals that didn't have the stuff in it that they said it was going to have, and it's just a waste of our time. And lenders, that capacity matters, and we don't want to work on deals that we can't fund. We want to work on deals that we have a chance to fund. So
Right.
I think AI is a big part of that. And as a broker, you have some tools that, at their advantage. I mean, Connect, we have an AI section in Connect that a broker can use. Doesn't cost them anything to use it. They can put it in, and it'll tell them what they're missing,
Mhm.
and then it even will give them, some lenders that should work on that deal. So I mean, it's a pretty good thing. But people are going to have to embrace the AI.
They will, and I think by more and more, everybody will start embracing it. It's just a matter of, it's, I want to say it's in its infancy, but it really is. I mean, all this stuff has just come about the last bunch of years, and everybody's just trying to figure out what it's going to do and how it's going to do, and as it's getting implemented into the environment that we're in, it's just going to do a lot of good things as it moves forward.
Yeah, I think another thing brokers need to start taking a real hard look at is, I really am amazed at the number of times brokers will send me deals with a client's tax returns or a PFS in it with their information in, and not send it through our secure portal. Because we have a way for brokers to send us secure files because we are a regulated lender. We have a firewall like most banks do, and I'm still amazed at the number of brokers that just put that tax return on an attachment and send it right out instead of sending it through our secure files link that we have in our signature. I think brokers are really going to have to tighten that up, and they're going to have to be more cognizant of taking care of their clients' data, and making sure that it doesn't get out there,
Right.
as AI continues to grow. So let's talk a little bit about a couple of lender spotlights if we can.
Yeah.
Is that all right? Yeah. So one of the ones that I want to talk about today is the ARF, and they're a being fully transparent. They've been a great partner to the Commercial Loan Association, and we certainly appreciate them. But we also know they're a fantastic lender as well. They offer either a fully amortized payments or interest only payments, whatever works for the client. The other thing that that they do is their credit appetite. Right now, their focus is on about $1.5 million and under. They'll do terms from 1 to 3 years, and they offer some interest-only products as well. So we think ARF is a really, really good lender. Their primary focus, as a lender, is on restaurants, retail, medical, wholesale, and manufacturing. So they say we can fund a merchant who's only been open for a month. The longer time in business obviously gets a better deal, but they're willing to work with startup companies too. So, that's something that as brokers, we need to learn their program and their product and make sure that we keep that in our toolbox, but know their product. Go and look and see, reach out to them, and they'll be glad to talk to you. They're one of the lenders, Scotty. They've actually named their AI.
Yep.
Their AI is named Stella. So, if you want to send a deal to ARF, you send it to Stella at arffinancial.com. And Stella's going to go through your deal and either kick it back to you and tell you what you're missing or get it on through. So I think that's pretty cool that, Stella is their AI assistant. And, you don't want Stella rejecting you. You want her passing your deal on through so you can talk to some, to a human there. But anyway, think about ARF. They're a great lender, and we certainly appreciate their support, for the Commercial Loan Broker Association.
Yeah. Stella's really cool. And I've been on a couple of webinars with Steve, excuse me, as he's working, giving his webinar and describing what Stella does and how it works. It's really a cool system that Steve has there. And it really has kind of streamlined ARF and the backside of how they do transactions with all the brokers they work with and the asset classes they work with too. So it's a really cool thing. I have a deal spotlight that I'd like to share with you guys too. It came from Garrington Capital, which Garrington Capital is a division of Baker Garrington, who happened to be our co-host for the last couple of years at Commercial Loan Broker convention out at, this year we're going to be in Indianapolis at the JW Marriott. But this particular deal was around the fracking and sand transport business, which is in the oil field service. The key friction points for this deal was they needed to pay their subcontractors and manage large receivables. So Garrington Capital went in and put a $9 million factoring facility in at a 90% advance rate, which is fantastic.
Wow, that's
it helped them scale their business and help them take control of larger contracts to be able to grow their business to a higher level and be able to grow the relationship with this particular company by factoring their receivables and allowing them to get cash up front now instead of having to wait, excuse me, for a particular term to get those receivables in. So that was a great win for this particular company and a great win for Garrington Capital.
Yeah, that's a huge advance. A 90% advance is a huge advance. So, that borrower must have some, some great receivables there for them to give that kind of advance, on
Yeah.
that. And that's fantastic. And Baker Garrington is somebody we really think a lot of, and hope that our brokers are out there supporting them, because, Bob and his team, Tammy and all of them have been, great to us at the CLBA, and we want to continue that relationship with them. So um, now I think what we want to do is we're going to have spotlight on education. And I think most of you that know me and know Scotty know that we believe that education is paramount to the success of any broker. I don't care who you are, attorneys, CPAs, doctors, all of these professional people have continuing education that they have to all do to keep their license, to stay in practice and things like that. And I just believe commercial loan brokers, should have that as well. If you remember, I told you at the beginning of our session here to hang around, because we had Christina Dar and Jenna Siddell that were going to join us. We're going to talk about some of the spotlights on education that we have going on, in the CLBA and in our community. So with that being said, Scotty, let's talk about your weekly webinars first. Tell me how that's going.
Yeah, I'll be happy to talk about that. Super excited. We got our webinars kicked off this year on January 13th, and we're going all the way through till October 27th, which is right before our conference out in Indianapolis at the JW Marriott, which is November 2nd through the 4th. The webinar series has been fantastic so far. We've had an average of 45 to 50 brokers on each week. Each week we feature 2 new lenders, and we talk about several different things, asset class, more importantly, what's going on in that particular asset class across the marketplace. So it's very educational, and is a great way for brokers to pick up tips about what's happening in that particular asset class or in that particular marketplace, that the lenders are discussing too. We do this 42 times starting in January, going all the way up to October 27th. And it's really good opportunity for you guys to learn and talk and learn more about what we're doing on a weekly basis with all of our lenders. And that's what we do weekly. So I'm going to kick it over to Christina, and I'm going to let her share what we do on a monthly basis.
Hi,
All
thanks,
right,
Scotty.
Christina. Yeah.
Thanks, Terry. So on our monthly basis, we do this DealTalk podcast, which is going to feature several different guests throughout the year. Each month we'll have a main topic and just talk about what's in the news having to do with a certain topic. We're going to talk about how technology plays into that. Every time that we have this, we're going to talk to a lender or talk about a lender. We're going to talk about a specific deal and how it all ties back in. So really great information that you're going to get on a monthly basis from the association as well.
Okay. Jenna, just let me say this for the CLBA folks, without Christina, Scotty, and Jenna, there is no CLBA. So these are 3 integral pieces, and I don't want to, they're people obviously, but they're so important to what we do in the CLBA. So I appreciate all of you. And Jenna, I think you've got some things we're going to talk about too. Go ahead.
Yes, so I wanted to quickly discuss our Mastering Client Success series, which is a continuation of a series that we had last year. It's 4 quarterly workshops that we are going to host, and the goal is to educate brokers on how to be their best selves as a broker. So we're going to focus on things like structuring bankable deals that lenders are going to be excited about, prepare brokers on the best way to put together a deal package. We're also going to talk about how to become a trusted growth partner. So moving beyond just one deal and becoming a source of insight and wisdom for your clients. And then we'll also talk about building a strong reputation and how that really helps you build your brokerage in the long run. And finally, we'll wrap it up by talking about how you can use technology and industry resources to scale your brokerage business. So I'm really looking forward to those. We have one each quarter this year, and our first one is in February. So I'm really looking forward to it.
Well, I appreciate that. You're also kind of the coordinator, director, however you want to say it, for our leadership council. So why don't you talk about that for just a second?
Yeah, so our leadership council is made up of about 6 members, and we meet with them quarterly as well to discuss the direction of the association. We run our workshop ideas by them. We talk to them about the breakout session topics that we are looking to do for our annual conference. They give us feedback on if they think that we're headed in a great direction and if it's something that they feel the industry could benefit from. We also work with them on, just kind of sourcing maybe some news items or talking with them about what they're seeing in the industry and how they think that as an association we can help the broader community.
Great, outstanding. So, Christina, I think you and Jenna had some things you want to talk about the upcoming conference and expo.
Yes, we do. So we're super excited. This team here from the CLBA, we call ourselves the Pit Crew because we're going to be in Indianapolis in November for the 2026 CLBA Conference and Expo. So we've been working really hard behind the scenes to put together a fresh new conference for you. We did a survey at the end of last year's conference. We got feedback and we really took it to heart. And we have kind of 4 main points we want to touch on for the changes. First of all, we're expanding our exhibit hall hours. That was probably the number one thing that we heard on the survey, is that y'all wanted to have more time together in the exhibit hall. So we're definitely going to do that. And we're working to improve those breakout sessions like Jenna just touched on with the Leadership Council. We got some advice from everyone on what they want to hear. And Scotty, I know you're working hard on that too, on those topics. And then Jenna, what about the general session?
Yeah, so this year we are looking to re-energize and reimagine our general sessions. One, we are looking to just kind of make them a little bit more exciting, get some momentum going, especially in the beginning. And the biggest thing that we're going to try to do is make sure that any of our educational content in our general sessions are truly impactful and easy for any attendee to comprehend, and make it so that anyone who attends a general session walks away with not just impactful information and strategies that they can apply to their business, but just an overall feeling of empowerment, excitement, and looking forward to moving into the next year as a business owner.
Awesome.
Yeah, I really appreciate you guys' focus on this and attention to it, and I think it's a big part of who we are as a company. We also have the Commercial Loan Broker Academy. People say, well, Terry, why are you doing the association? Is it making you money? No, it's actually cost us money the first few years. And it's okay, because as Scotty and I were talking about earlier, individually and offline, both of us believe in this community, and we believe that we need a community that is together, that is focused, that can help grow our industry. They say our industry is going to triple in 3 years. Well, if it does, we don't have enough quality loan brokers, commercial loan brokers to make that work. So that's why 2 years ago, we started developing the curriculum for the Commercial Loan Broker Academy. So the Academy and the Commercial Loan Broker Association and, our BidCo and Alternative Capital Solutions, we all work together as one. And then, we've got Connect that we use, for brokers that can input deals and stuff. So we just want to help brokers. There's a couple brokers that have been through our training, and they've engaged us to where I mentor them and work with them, meet with them, on a weekly basis to try to get them up and going. So if you're interested in the Commercial Loan Broker Academy and really, really expanding what you can do, we have our next in-person training March the 16th through the 19th. But I just want to say to the three of you, I really appreciate everything you do. We couldn't do any of this without you. And you're just a blessing to have for our company, and you're a blessing to the commercial loan broker community. I hope they all know and realize how much and how important you are, and how much you really do for them, all three of you. So thank you so much for what you do. I know it's been a longer session than normal, but I felt like this was really important. So I just wanted to say thank you to Scotty and Jenna and Christina for being with us this afternoon. And we'll cut it off for today. But this is Terry Luker with DealTalk. Thanks for being here.
Thank you.
Thanks, everybody.
Thank you.
See y'all.
Bye.
Bye-bye.